Guys, Sarah, Mark, it's great to see you. Thank you for being here. This will be fun. We have a lot to talk about. You guys are sort of in this similar cohort. I want to start with, we were just calling it sort of the new guard of venture capital. You both left more established firms and went out and started your own thing. And Sarah, maybe we'll start with you because it's been around longer, Conviction.
2 full years.
2 years. How is it
going?
Yeah, how is it going? And tell us the decision to leave an established firm like Greylock and start Conviction. What was kind of driving that decision?
Yeah, it's been a lot of fun. It's a lot of work to try to start something from scratch. But I think the biggest thing is just a parallel to like the technology companies we actually back, right? You have the Microsofts of the world. You also have, the scale-ups like OpenAI, and you have the next startup, and they're all amazing companies. They're great at different things, and I think people should find the environment that's great for them. I really missed being like entrepreneurial, and as the industry has matured, like sometimes what happens with founders, they just see an opportunity that they have to go after, and for me, AI was that.
That's great. We'll talk a lot about AI as well. And Mark, what's been your experience with the industry?
I think a lot of similarities to Sarah. I think my co-founders and I had come out of Index Ventures, Bessemer, Andreessen Horowitz, some of the biggest funds in the world, and we really felt like there was misalignment between what the big funds had become and the founder product that was missing in the market. And our sense was being able to use our experience and hustle in a new environment with a clean slate was really exciting. And I think you would probably agree with this too, but it feels like the most dynamic time in the venture capital industry in the last 25 years. I mean, it feels like every day we wake up and there's a new change in the industry. And that's exactly when you want to start something. And I think the opportunity for us and probably for Sarah as well.
How do you guys think about deal flow too? When you leave a firm like that with the scale that comes with the Greylock and Index, Andreessen and the names you mentioned, getting access to deals. So what did that look like? Was it a challenge? I'm sure a lot of this has to do with personal relationships, but talk about that.
Yeah, I would admit, like I started terrified, and it was the first question LPs asked me, which is like, hey, do people want to work with you because you're you, or do people want to work with you because of your platform? And I was like, it's a really good question. We're going to find out. But I think, like, again, just the parallel to like startup tech companies, I think is just pretty easy, which is you don't need that many people and that much money to compete. And entrepreneurs, if you look at, it's a diverse set, and people can be looking for expertise, they can be looking for personal connection, they can be looking for like shared ethos, they can be looking for an ecosystem. There are many different reasons to choose a partner, like a human being or a firm. And I think it's just more possible to compete than maybe incumbents would like. I'd also say, like, venture has just matured, as Mark was pointing out a little bit. Firms have gotten much, much bigger, and as they get multi-stage and multi-product, I think just being focused is a super powerful thing.
That's really interesting. Does that align with your experience, Mark?
Very much so. And I think if you look at the way the industry is moving, it's almost like what happened in private equity 10, 20 years ago. It's the industrialization of the asset class. And as these large funds go multi-product, multi-geography, multi-business unit, wouldn't be surprised if the end game is an IPO for one of the large venture funds. We think that we can provide a really nice point of contrast to that, which is a boutique. It's we're going to roll up our sleeves, we're going to be in the trenches with you. Right now we're working out of a converted garage in South Park right now, and that's fun, that's exciting, and I think that energy is starting to resonate in the ecosystem.
Founder mode, you guys are back.
Founder mode, founder mode.
It's interesting, the point about maybe one of these VC firms going public, I feel like the scale has gotten to the size of some publicly traded companies. What's the disadvantage there? If you have that scale and those many billions to deploy, does it add some pressure that makes you maybe do less quality deals? Talk about maybe what that has evolved into.
I'm happy to. I mean, so I think Sarah talked about focus. I think the superpower for a new fund is to figure out what you want to do and to do it really well. For us, that's early stage venture. That's leading seed and Series A rounds. I think the advantage of the big platforms is the brand. They're really well known. If you go and stop a founder anywhere in America, you're going to hear a handful of names that have been around for 30, 40, 50 years. However, the Achilles heel of that is these are large companies, and the speed at which they move is very different than the speed that a Conviction or a Chemistry can move at. And so what I think is great is it's just more options for founders. You're getting a lot of different products. You figure out what resonates with you, and we think that there's a compelling new guard of products emerging.
And across different stages, I actually would love to get your take on that too. The evolution and these becoming just so much bigger than they were even 10 years ago.
Yeah, well, I think one of the things you might have been alluding to is your incentives change when you have a bunch of different products, and I don't think that the early stage venture business is a very scalable business, right? It's very personal. You're writing relatively small checks most of the time, and if you are working hand in hand with founders, you can't make that many investments. So it's not a particularly efficient, like a scalable asset class. If you compare that to bulge bracket private equity, for example, like, you know, when fund sizes start at $10, $15 billion. And so if you like want venture to make a real difference to the returns of very large LPs, then they have to outperform, right? And so, like, I think to me, the classic venture capital game has been basically like have great access, choose well, deliver outsized multiple, and even if it is on smaller dollars, you can make a big difference. I think when you start to aggregate huge amounts of capital, the fee stream matters more. You have different businesses competing, you have to manage a large business, and so I think it just becomes more complicated.
Are you seeing the lines blur a bit more between private equity and venture? It seems like there's been talk about the strategic roll-ups in venture that you always think of like a PE playbook. Is that starting to happen?
We're seeing it all the time. I'm sure you're seeing it too. This idea of the classic private equity roll-up, but can we sprinkle some AI onto that and drive the multiple up 10x? I mean, I'm skeptical personally. I think that people are underestimating the complexity of these industries, and there's going to be a lot of money that experiments with this and doesn't necessarily work, but we're starting to see the convergence of the asset classes now.
Is that something you're coming across, Sarah, as well?
Yeah, I probably share some of the skepticism that Mark described, which is more, I would describe as like a healthy respect for the operational challenges of like managing a lot of people in complex processes and doing change management, right? That's like a lot of the management work of private equity.
Right.
And it's like, it's underwritten very differently as an asset class. And so I do think people are becoming multi-product. I think there's a lot of interest in that. To me, the more natural path, and maybe it's just the strengths of our partnership, is like, I think we can go after traditionally like very services heavy businesses. We're just gonna like verticalize with a lot of technology versus try to take over existing firms.
Yeah, do the roll-up strategy. What about the stages you guys are investing in? Is it specifically seed, or does it give you a little bit more flexibility having your own fund and being a little bit more nimble?
I'd say like we are definitely figuring it out as we go, but I'm pretty myopic when I am trying to figure out if we can even achieve a single first goal. And the first goal for us is we're very comfortable being very early stage investors, pre-seed, seed, Series A, and we want to be good partners for the long term for that set of entrepreneurs. You know, who knows what the future holds.
What does that look like in AI? Are there companies and founders, we've seen so many people leave an OpenAI, for example, and go off and start things seemingly without a pitch book, but people are backing the founder. What does that look like, and how are you underwriting some of those deals? If you're just sort of saying, okay, you don't have a business yet, but you're an amazing founder, what are you looking for to sort of measure that?
The founder in particular?
Yeah, well, I guess the companies that just have the exciting founder. Maybe not a business. I don't know if that's something you are getting into, but I feel like we're seeing more of it.
We've definitely done, 2 founders in a slide deck, or 2 founders an idea.
Yeah.
And so it usually comes with an idea, and we'll have some pre-existing view of whether or not a market is attractive, if we believe in like a disruption thesis. But I am a very founder-driven investor. My partners are very founder-driven investors, and I think you're looking for a set of key traits that is unchanging over time, right? Like force of will, creativity, ability to draw people to the cause, like seeing the world very differently, lots of empathy for users and customers. And then maybe specific to our domain of AI, I think the ability to understand the landscape and project capability and be very first principles about how these industries look in the future, that matters more to us.
And what about you guys, Mark? Is that something you've done so far? I know it's maybe you're earlier in this new fund, but tell us more.
But you made investments.
We've made investments, and we're having a lot of fun so far. So I would say on the AI side, this is the year we're going to see the put up or shut up side of the hype cycle. This is where we're going to see the technology has to have an impact on your personal life, your professional life. It can't just be a technology that's increasingly improving from the sidelines. It has to be entrepreneurs bringing this to you, serving it to you on a silver platter. And one thing I think about is, when I go home for Thanksgiving in November, are my relatives who are not in the tech progressive side of the country going to be using AI or not? If they're not, we have an issue in AI. And I think a lot of the investment pullback will happen.
Go into that a little bit more, the evidence side, because I think that's something that, I mean, massive Fortune 500 companies, like they have the same pressure to show results, to show return on investment. How do you measure that from a startup perspective too? If you say this is a great idea, we haven't quite seen it, like what sort of inputs, what sort of evidence are you looking for?
So I think that the North Star for us is actually really similar to what Sarah was talking about, which is we're looking for great entrepreneurs and we're going to get behind them as early as we possibly can. For us at our fund, that's leading the seed, leading the Series A, but we're looking for that, kind of, you talked about some of the attributes. I would add grit, this sense of this business has to exist and I'm going to bring that sort of energy to it.
Yeah.
I think that can manifest in a lot of different ways.
What do you think about the sort of, did you say put up or shut up
Yes.
moment?
Yes.
Is that something that resonates?
I mean, if the question is like, do you need to express some real user value or revenue dollars at some point? And like all things follow from user value,
Sure.
right? So I absolutely believe in that. I think we will take bets that are truly like scientific and technology bets, where there's an open research question about whether or not something is possible, and step 2 is delivering that to users.
Okay.
But we wouldn't make those investments if we didn't have a good picture of like, why would Kate ever care, right?
Yeah.
Why will the user ever care?
Okay, so it's that long-term horizon. This is sort of out of left field, but quantum, have you guys done any investments in quantum?
Yeah, we have not in the fund. I've spent some time looking at it. I think, what's the phrase? Quantum is like the field where we're always 2 years away, right? And if we can get to a scalability that is actually relevant for any real-world applications, like it is a completely revolutionary, I will let the scientists tell us if we're closer.
It's funny, that 2 years away, that used to be self-driving cars.
Yeah.
And we said that for, at least for me, for 12 years.
Yeah.
And then we showed up in a Waymo right
Yeah.
now. And I think that's going to be the story of 2025 beyond AI, which is, for me, getting into a Waymo for the first time was the same feeling I had getting an iPhone for this time, this magical sense of consumer experience. And I think what you're already seeing in the data is Waymo surpassing Lyft here in San Francisco, and I think it's likely going to surpass Uber and all the ride-sharing platforms, not just in San Francisco, but around the country. So I think these technologies are always a slow boil until it tips, and then nobody talks about it, and that's the one I'm interested in right now.
Waymo is such
That's
a good
put up or
analogy.
shut up example.
That is.
Yeah.
That
Shown
is.
up.
That's right. It's shown up. At
That's
least in
such
San
a good
Francisco.
example. And like it feels like San Francisco can be a leader as like a tech hub. You'll see that probably proliferate across the country, I would think. But yeah, Waymo is such a good example of that. Yeah, quantum has gotten quite a bit of attention, at least in public markets. So, and then the AI hype cycle as well. This is such a broad question, but like, where are we, do you think, in that cycle? Is there going to be that trough of disillusionment, and where are we in the whole?
So, like, in your question, Kate, is like probably a few different ones. One is, are we going to see more AI capability? 2 would be like, are users going to see real value? And 3 is, are investors going to make money along the way, right? I think we're pretty early in all of those. It's very hard to predict scientific progress here. But we have companies in our portfolio that faster than anything I've seen in my investing career are at millions of users, tens of millions of revenue. And like, those are the things I pay attention to, right? I want to believe in the technical theses and the people, and then like we want to see the reality pretty quickly, but I think we're seeing it.
Is it fair to call it a hype cycle with that in mind?
I think that when you have these sort of disjoint technology shifts, people are going to make big bets one way or another. They're going to figure out how they want to invest. And for example, like I think the core foundation model market will be pretty oligopolistic, right? There's not going to be hundreds of players. And for a period of time, there were a lot of private markets investors that were backing additional foundation model companies. I don't know if it takes $500 billion in Stargate to compete, but it is a very expensive game still, no matter what scale you think it is. And so I would say, I think we're going to see a bunch of little hype cycles where people think they know the answer, but I think we're in like inning 1, and the secular trend is we see a ton of value creation.
Does that resonate, the hype cycle? And you talked a little bit about needing the proof, but where do you think we are in a potential cycle?
Well, can I say that just because you brought up Stargate, that the entire hype cycle has shifted up a notch post-Stargate and the $500 billion headlines. Obviously, a lot of details we still need to figure out. I mean, listen, I think stepping back, the long-term trajectory is very interesting. If you think about where GPT-2 was in 2019, I think it could barely count to 10. And by GPT-4 a year ago, it could pass the California bar. So if you draw the trend line and try to understand where we are, to me, superintelligence is a when, not if question. I have young kids that are, kind of toddler age, and by the time they're in high school, I'm sure we'll have superintelligence. And so I think it has profound implications that we're still wrestling with. That said, I think that there's a long way between here and there, and we're going to need to see real value delivered in order for these companies to stay well funded.
What was the significance of the Stargate announcement? It's such a big headline number. I'm sure a lot of that work was probably happening anyway, despite the big kind of splashy announcement. Is that a massive tailwind for the industry, just having the backing of the U.S. government officially?
I think that it would be a good thing for America to have more of its own data center infrastructure and in supporting model training and inference here. There have been issues with sufficient infrastructure to support the rapid growth of the AI industry over the last couple years. Yeah. And so filling that demand can only be a good thing. I also just think it speaks to the sort of increased geopolitical importance of these technologies, where I think sovereign AI is going to be a strong expectation from a bunch of countries.
Is that something you hear among founders? Just the idea of sovereign AI, the need or want to build in the US? What's the conversation like among your portfolio companies?
I think that there are requirements around privacy, around capability, and around security that make sovereign AI relevant. We're an early investor in a company called Mistral. They are a French and European champion. They support lots of languages, and languages are really important. They have a bunch of concepts embedded in them, right? And so I think we see from customers that that's a real need.
That's really helpful. Should we talk about ZIRP for a second?
Sure.
we're past ZIRP. We're now in 5% land, or wherever we are. Kind of looking back, I mean, you guys both started funds, I guess, after the ZIRP era. I guess depending on when Conviction was started.
October of 22.
Okay. But what are some of the lessons kind of looking back to that free money era, what that meant for venture, and kind of how you're adjusting to this new rate environment? Mark, maybe you can start.
Sure. I mean, first off, I think it's a tale of two markets. I think it's AI and everything else. On the AI side, I don't think anybody remembers the ZIRP days of 2.5 years ago. I think the discipline is not there. I think there's a lot of money going in. I think, two folks and an idea is enough to get incredible funding, as we're seeing. And then paradoxically, the bar has risen for everything else. So it would have been required to raise additional money in that era has now gone up so much for companies that are building software, consumer products, and all sorts of things. So I think you really have to think about the nuance of the sides of this market to really answer that question.
What about your kind of hindsight on ZIRP, where we are now?
I think founders operate as investors who have lived through an economic cycle like this. Should probably be a little bit wiser that all capital has a cost. There's actually massive value to being a capital efficient growth machine, right? And I think I think perhaps it makes people just think about their balance sheet a little bit more carefully and think about the fact that in the end, the arbiter is often the public markets, as you guys well know here, and those valuations have to meet reality at some point. I actually remember debating with one of your partners the idea of the fat startup in the core ZIRP era, which is you can just outraise other startups and bully them out of existence. I think that is generally a pretty bad formula, and we should remember that.
It's a good lesson to take away.
It was a very popular idea. Remember?
Yeah.
Yeah.
The startups.
Then they got on the treadmill, and
Yeah,
we
right.
see many
they're
more lean startups now.
Yeah.
So what about the companies that did raise massive amounts? I feel like there has been a little bit of a reckoning. Is there more to come just in sort of the reality check of valuations? Maybe that's IPOs? What does it look like?
I think the reckoning is certainly coming for a lot of these unicorns that raised in that ZIRP period. I don't think the reckoning is going to be a lot of bankruptcies, though we will see some. I think a lot of these companies conserve cash, have an ability to thrive or to survive, but not necessarily thrive. And so I would almost say it's a zombie state of late stage companies that we'll see. The biggest impact will be the best people from those companies will go work on the AI frontier, and where there is growth is where the talent will go. So I think it'll be an unceremonious dethroning of a lot of these unicorns, but not necessarily the mass exodus in startups that other people had predicted.
And what's the opportunity if that is the case? If there are these zombie companies, whether it's M&A, maybe these companies get bought up, or this new pool of talent that's maybe looking to go elsewhere, where would you see opportunity in that?
I think the opportunity we think of is definitely the talent, because people are looking for growth and also understanding like the state-of-the-art technology. But I actually think it's going to be a big challenge for the industry. The zombie companies are capable of staying around for a long time, given the ability of existing investors to support them, the large balance sheets. And I think one of the things that I like to have a lot of respect for, and Mark's been an investor for a long time too, is it's just very unpredictable paths of companies, and I have a lot of empathy for entrepreneurs who want to take capital when it is available. There are several companies I invested in at my old firm, Stack Blitz and Base 10, as two examples that they raised healthy rounds in a different environment. They took a while to build product, and they've had really breakout growth over the last year or so. These companies were not like sort of started in the last year, but the fact that they raised enough money to give themselves several shots on goal to find real user value made a difference. And so I'd say I think we're going to see some happy stories as well.
That's a great example. Yeah, the ones that probably hung on long enough to hang on just long enough until they could kind of make the next wave.
Well, and I think the decision making for entrepreneurs also really matters in terms of like, well, if you know you don't have product market fit yet, keeping your burn low as a company was a much smarter decision. I think if you were spending $5 million a month because you raised $100 million but it wasn't working yet, like that's very hard to recover from.
We're back in the treadmill.
Yeah, and you can't like gracefully leap off.
Yeah, exactly. No, I like that visual. I'm also thinking of the Monty Python, like we're not dead yet.
Yeah, that's where my head went to.
Love that. What else did we talk about? Well, we talked about AI, ZIRP. I guess the IPO market. I mean, it's maybe further from where you guys are now, but IPOs in general, and then maybe deal making in this new administration. We are in a new presidency. What is that going to look like?
So I think the folks that are looking for the flood of IPOs are going to be disappointed this year. I think we'll see a handful of companies go out. I mean, obviously ServiceTitan did a great job going out in December. That said, I think we're seeing more companies decide, why would I go public? And why not raise late stage private capital, Databricks, Stripe, SpaceX, some great businesses that are just deciding not to cross the line into the public markets, even though 5, 10, 15 years ago they would have. I think we'll see much more M&A. I think M&A is going to heat up dramatically given the regulatory environment that we're heading into and the lack of liquidity at these later stages. And then the last thing I'd say is I think we're going to see more innovative secondary products emerge to provide liquidity as companies stay private longer. So sadly, I know everybody wants to see the floodgate open on the IPO side. I don't see it happening this year.
The window. I feel
the
like
window.
We're always
People
waiting
want
for the
window.
What are you seeing, just I guess in secondaries and sort of the deal activity maybe aside from IPOs?
The secondary market is like very rich. We get lots of inbound excitement about the portfolio. I think on the M&A side, we've already seen some early action in the portfolio. It would be hard to imagine a less friendly environment than last few years, and so I imagine that will improve. And I think that's a really important instrument to support innovation.
Yeah.
Like having the bulk of exits for venture-backed companies is an M&A, right? Not for becoming a public company. I think that's that's the dream for most, but I think making that available and allowing talent and capital and success to recycle into the ecosystem, and then that innovation, those products to diffuse to the larger bases, is a natural part of the ecosystem.
What has the vibe been? We're talking about M&A, and it feels like this sort of started end of last year, but it feels like folks have been really busy. There's all this excitement around deals. Maybe just describe kind of what you're hearing and just the feeling in Silicon Valley right now around deals.
I guess reflecting on very recent activity for us, I think we are at a point where the large incumbents with the currency to make acquisitions, be they large privates or public companies, they are able to act there's a lot of not just founder mode companies, but companies led by CEOs with real strategic vision, and having been unable or not even asked to take really aggressive action over the last 5-10 years, I think AI is a big threat, right? And an opportunity for a lot of these companies. And so I think we're going to see an increasing amount of activity as people adapt their businesses to the change they're projecting.
Mark, we'll give you the last word, the vibe. What is the vibe right now?
Vibe's exciting right now. I think we had a hard few years here in San Francisco, both as a city and as a community in tech. And I feel like the vibe is people high-fiving with excitement right now on the promise of what's to come. A lot of that's obviously driven by the AI trends, driven by the kind of reconsolidation of tech talent here in person in San Francisco. So there's a lot of excitement. There's a lot that we need to do as a tech community to back that up, but it's a good time in San Francisco.
Well, guys, this is such a great discussion. Thank you for being here in person in San Francisco. It's great to see you both. Sarah and Mark, thanks for being here.
Thanks, Kate.
Thank you.